Hey guys, today we're going to take a deep dive into the MicroStrategy Bitcoin Playbook. We will be going over most of the key concepts that get frequently mentioned in this community, such as ATM offerings, mNAV, convertible bonds, and so on. These concepts can initially seem a bit intimidating at first. I mean, they were to me, but my goal in this presentation is to simplify each key concept so that it is more digestible for you. Let's dive in. Now, let's talk about at-the-market offerings, otherwise known as ATM offerings. They first emerged in the 1980s, actually, primarily for utility companies. Back then, these companies needed a flexible way to raise funds without disrupting the market or causing sudden price swings in their stock. This method proved to be an innovative approach to financing and allowing companies to raise money efficiently. The core concept and mechanism of an ATM offering is selling shares to raise capital. Unlike traditional methods like initial public offerings or IPOs, an ATM offering is not a one-time event. Instead, companies can sell their stock incrementally over time, giving them greater control over the amount and timing of the capital raised. And what's unique about ATMs is that shares are sold directly into the open market. This process is done through brokers, targeting regular market participants rather than institutional buyers or private investors. This allows companies to raise funds without negotiating deals or issuing large blocks of shares at a discount. Traditionally, ATMs were used for debt reduction. Companies struggling with debt found these offerings particularly helpful in maintaining cash flow and strengthening their balance sheets. But in recent years, companies like MicroStrategy have pushed the boundaries of how ATMs are used. This brings us to the MSTR speculative attack. MSTR's use of ATM offerings is a deliberate and strategic attack on weaker stores of value and inferior forms of money, such as the US dollar or other fiat currencies, company shares, and USD-denominated debt. By converting capital raised through ATMs into Bitcoin, MSTR is systematically accumulating the perfect, finite, and incorruptible money of Bitcoin. This strategy positions the company to escape the depreciation of fiat currencies and other failing assets while securing long-term dominance in a world increasingly gravitating towards sound money principles like Bitcoin. Now, let's talk about the compounding effect. By strategically timing their ATM offerings and investments, companies like MicroStrategy can amplify returns. For example, the money raised through an ATM can be used to purchase assets that appreciate in value over time, creating a feedback loop that benefits the company and its shareholders. Finally, let's consider the scale of this strategy. MicroStrategy recently announced a $21 billion ATM offering, initially meant to be over the next 3 years, but because of high trading volume and interest in their stock, MicroStrategy has been able to nearly complete 100% of this $21 billion program in about 3 to 4 months, which is absolutely insane. It shows just how far this concept has evolved. This massive scale highlights the growing importance of ATM offerings in modern finance and the potential for companies to use them innovatively. Now on to convertible bonds. They emerged in the 1800s for railroad companies. Convertible bonds have a long history, first appearing as a way for these companies to finance their massive infrastructure projects. These bonds gave investors the option to convert their debt into company equity, providing a sense of security while also offering potential upside if the company succeeded. Today, they are popular for volatile growth companies. In the modern era, convertible bonds have become a tool for companies experiencing high growth and volatility. These bonds allow such companies to raise capital at lower costs while giving investors the opportunity to share in the company's success through conversion into stock. Now, as for lower rates, one of the main advantages of convertible bonds for companies is the ability to secure financing at lower interest rates compared to traditional bonds. This is because the conversion option offers additional value to investors, reducing the need for high interest to attract buyers. And there is optional conversion of debt to equity. So the defining feature of convertible bonds is that they give investors the option, but not the obligation, to convert the bond into shares of the issuing company. It's essentially a call option on the stock. This provides a safety net. Investors can hold the bond for steady income or convert to equity if the company's stock price soars. But there's also a component of short hedging. Convertible bonds often lead to short hedging by bondholders. To protect their positions, investors might short the company's stock as a hedge against potential losses. This creates an interesting dynamic where convertible bonds can influence stock price movements. They are also, for the most part, unsecured and non-recourse. So unlike traditional bonds, they may be secured by company assets, but convertible bonds are often unsecured. They are also non-recourse, meaning investors cannot go after the company's assets if the bond happens to default, making them slightly riskier from an investor's perspective, but potentially more rewarding, especially if you're investing in a stock like MicroStrategy, which has insane volatility and high growth potential because of its Bitcoin acquisition. And finally, we have the key terms associated with convertible bonds here: strike price, premium, coupon, and maturity date. You'll see these terms on financial statements and filings from MicroStrategy. And the strike price is the stock price at which the bond can be converted into shares, just like a call option. The premium is how high the strike price is compared to the stock price at the time of issuance. The coupon refers to the interest rate paid to bondholders. In MicroStrategy's convertible bonds, as of late, have been at 0% coupon, so no interest rate. That's how valuable they are for the investors. And lastly, the maturity date is when the bond must be repaid if it hasn't been converted. Understanding these terms is crucial to analyzing how convertible bonds fit into a company's strategy. Let's look at a real-world example of a recent MSTR convertible bond to better understand the key terms in action. So on November 21st of 2024, MicroStrategy completed a $3 billion offering of convertible senior notes due in the year 2029. These notes come with a 0% coupon and a 55% conversion premium. So let's break this down. First, the 0% coupon means that the bondholders do not earn any interest payments during the life of the bond. This is highly favorable for MSTR as it eliminates the burden of periodic interest payments. Instead, investors are betting on the upside potential of converting the bond into shares if the stock price rises significantly, which obviously they anticipate that it will because it's highly linked to Bitcoin's price. And as for the 55% conversion premium, this indicates the price at which the bond can be converted into MSTR stock. In this case, the premium means that the strike price is set 55% higher than MicroStrategy's stock price at the time of issuance. So this gives MicroStrategy an advantage because it sets a high bar for conversion. It ensures that they retain the flexibility to manage their capital while incentivizing investors with potential upside. And the bond's maturity date is 2029 for the year, meaning that MicroStrategy has 5 years, because it started in 2024, that is. They have 5 years before the principal amount must be repaid, assuming the bonds are not converted into shares. This long maturity period allows the company to deploy the capital raised effectively, likely and obviously into accumulating more Bitcoin. So why does this matter? For MicroStrategy, this is a strategic masterstroke in my opinion. They raised $3 billion in capital at effectively no cost, with minimal dilution to current shareholders due to the high conversion premium. Investors are attracted to this offering because of the potential upside if MicroStrategy's stock performs well, and they trust in the company's vision, particularly in its Bitcoin-focused strategy. This example showcases how MicroStrategy uses convertible bonds to secure massive capital inflows without the financial strain of traditional debt or immediate dilution of equity. It's a win-win scenario for MSTR and its investors. aligning MicroStrategy's long-term vision. Next, let's dive into mNAV, or the multiple to net asset value. This is a crucial concept for understanding MicroStrategy's valuation dynamics, and mNAV has been discussed and debated ad nauseum online and in social circles like on X or on YouTube and certain MicroStrategy groups. So mNAV is essentially the multiple to net asset value. That's what it stands for. It shows how much the market values a company compared to its net value of assets. In MicroStrategy's case, this metric becomes particularly interesting because of its Bitcoin holdings. The formula is simple. mNAV equals market cap divided by net asset value. This means that if the market capitalization of a company is 10 times its net assets, the mNAV is 10x. For MicroStrategy, this ratio is closely watched because of its unique position as a Bitcoin proxy and, I would argue, monopoly. And Bitcoin spot ETFs typically have an mNAV of 1x. These ETFs are priced at or very close to the net asset value of the Bitcoin they hold, with minimum premium or discount. That's how they're designed. MicroStrategy, however, trades at a higher multiple due to its strategic positioning, management, and speculative appeal. And as for PE ratio versus mNAV, while traditional companies are often evaluated using the price-to-earnings ratio, MicroStrategy's mNAV is a more relevant measure because it reflects the relationship between its market cap and its Bitcoin holdings rather than its earnings, which are, at the moment, unfairly measured. And I'll get to that later. So is there a theoretical mNAV limit? This is an interesting question. So while there's no fixed ceiling, per theory, mNAV is driven by market sentiment, expectations about Bitcoin's future price, and MicroStrategy's ability to deploy capital effectively. So there's no real limit for that. As for the current MSTR mNAV and FASB fair value accounting rules, I'll discuss these in the next slides, and they are key to understanding where MicroStrategy stands today and how new accounting rules will impact its valuation. The current NAV premium against basic shares, which stands at 1.695x, that is the current mNAV when measuring against basic shares alone. This means that MicroStrategy's market cap is 1.695 times the value of its net assets, when calculated based on the basic outstanding shares. In other words, for every dollar of Bitcoin and other assets the company holds, the market values it at nearly $1.70. The second metric is the NAV premium against diluted shares, which is a bit higher at 1.944x. This calculation includes the impact of convertible bonds and other potential sources of dilution. It reflects the market's expectation of future growth, taking into account the additional shares that could be created through conversions. What's significant here is that these premiums are far higher than the typical 1x mNAV of Bitcoin spot ETFs, or just pure Bitcoin. This shows that investors value MicroStrategy not just for its Bitcoin holdings, but for its strategic vision, its ability to leverage Bitcoin effectively, and the leadership of Michael Saylor and the company at large. These premiums indicate strong market confidence in MicroStrategy, even with the potential for share dilution. This premium pricing is a testament to how the market views MicroStrategy as a Bitcoin proxy and a long-term strategic play. Now, let's discuss how Bitcoin is currently marked on MicroStrategy's financial statements and the major impact upcoming changes will have. Bitcoin is currently marked as a long-lived intangible asset, same as how patents are marked, interestingly. That's not already just sounds completely outdated, and it will be changed soon. So currently, on their financial statements, MicroStrategy is required to classify Bitcoin as a long-lived intangible asset. This means that if Bitcoin's price drops below its purchase price at any point, the company has to record an impairment loss. However, if the price of Bitcoin rises, MicroStrategy cannot reflect that increased value on their balance sheet. This leads to a distorted view of their financials, as the true value of their Bitcoin holdings is often significantly higher than what is reported. So how does this affect the P&E ratio? This is the main reason why MicroStrategy's P&E ratios have been underperforming and been very bad in nearly all their earnings calls. The current accounting rules negatively impact MicroStrategy's P&E ratio because the impairment losses artificially inflate their expenses and reduce net income, making the company appear less profitable than it actually is. This creates a misleading narrative and FUD for traditional investors who rely on P&E ratios and algorithms to evaluate companies, putting MicroStrategy at an algorithmic disadvantage in the stock market. But the FASB fair value rules, here they come into play. Starting with Q1 of 2025, MicroStrategy had announced in the Q3 earnings call that they will officially adopt the new FASB fair value accounting rules. And under these rules, Bitcoin will be marked to its fair market value, meaning any increases in Bitcoin's price can now finally be reflected on their financial statements. This change eliminates impairment losses and ensures that the financial statements more accurately reflect the true value of MicroStrategy's Bitcoin holdings. So this shift to fair value accounting is an absolute game changer for MicroStrategy. It will significantly improve their reported net income during Bitcoin bull markets, boosting their P&E ratio and making the company more effective to traditional investors. Additionally, it will align their financial statements much more closely with the reality of their Bitcoin strategy, showcasing the value of their Bitcoin holdings as a core asset. And the world of TradFi is in for a huge wake-up call with this come the Q1 2025 earnings call. And I believe it is going to be held at the end of April or early May of this year. Now on to Bitcoin per share. This metric means the Bitcoin holdings of MicroStrategy divided by outstanding shares. This gauges MSTR Bitcoin exposure. And the current Bitcoin per share metrics are as follows. Per basic share and per diluted share, there's these two different metrics here. 0.0018 Bitcoin about and 0.0015 Bitcoin for diluted shares. And there's also the value, and these metrics can be found on MSTR Tracker and SaylorTracker.com. I'll try to link them in the description of this video for you to check out if you want. Bitcoin yield. It measures how much Bitcoin per share increases or decreases over a specific time period. It shows whether stock dilution or convertible bonds or other financial debt instruments, fixed income instruments, are adding value by increasing Bitcoin holdings per share. This is a brand new KPI, and it's gaining traction in the Bitcoin treasury company world. And other Bitcoin treasury companies like Metaplanet over in Japan have been using and adopting this Bitcoin yield KPI in their financial statements. It's great. And as for future use in financial statements, any Bitcoin treasury company, as they grow in prevalence, they will very likely adopt Bitcoin yield, and it will become a standard KPI in companies at large in the future, I predict. Now let's explore market cap weighted indices and their impact on MicroStrategy. Larger companies get a larger weighting and funding. Market cap weighted indices like the MSCI World Index, Russell 2000, Nasdaq 100, S&P 500, etc. allocate more weight to companies with higher market capitalizations. For MSTR, as they grow, they would earn a larger share of these indices, driving additional investment from passive funds. As for the MSTR flywheel effect, this creates a powerful effect where as MSTR's market cap grows, its weighting in these indices increases, attracting more passive fund inflows. These inflows push MicroStrategy's market cap even higher, reinforcing the cycle. However, keep in mind that this can and does work in the opposite direction during, say, bear markets. So a long-term perspective is definitely essential when holding MicroStrategy. As for passive income, these indices drive trillions of dollars in passive investment flows. much of which comes from retirement accounts. This provides steady long-term funding to companies like MicroStrategy as their weightings increase over time. And as for the Bitcoin black hole, many people invested in these indices unknowingly gain Bitcoin exposure through MicroStrategy's inclusion. As MicroStrategy's allocation grows, more passive investors are exposed to Bitcoin's performance without even realizing it. This creates what's effectively an involuntary Bitcoin exposure mechanism. Over time, this could amplify Bitcoin adoption through indirect exposure. And this was an absolutely huge moment recently. MicroStrategy is now in the Nasdaq 100 index. This is another market cap weighted index, as discussed in the prior slides, and they got included on December 18th, 2024. This milestone marked a huge step for MicroStrategy as it joined one of the most prestigious indices reserved for the top 100 non-financial companies listed on the Nasdaq. They got a huge liquidity boost for MicroStrategy because inclusion in the Nasdaq 100 brings massive passive fund flows. Index funds and ETFs tracking the Nasdaq 100 now allocate capital to MicroStrategy, increasing liquidity and driving demand for its stock. And Bitcoin is now in the Nasdaq 100, whether people like it or not. By proxy, Bitcoin has effectively entered the Nasdaq 100 through MicroStrategy. This inclusion gives Bitcoin indirect exposure to trillions of dollars in passive investments tied to the index. And MicroStrategy acts as a Trojan horse, I believe, for Bitcoin, embedding Bitcoin exposure into the portfolios of investors who may not even be aware they're gaining exposure to Bitcoin's performance through MicroStrategy's inclusion. And there is no profitability requirement needed for the Nasdaq. Unlike some other indices, the Nasdaq doesn't require companies to be profitable for inclusion. This means that MicroStrategy's heavy investment in Bitcoin and long-term strategy did not disqualify it from joining the index. This inclusion solidifies MicroStrategy's position as a key player in both the traditional financial world and the emerging Bitcoin ecosystem, driving more passive exposure to Bitcoin globally. Let's now discuss the big elephant in the room, the S&P 500. This is the largest stock market index. The S&P 500 is the most widely followed index, representing the largest and most influential companies in the U.S. stock market. Inclusion would elevate MicroStrategy's visibility and attract significant passive inflows, and the S&P 500 is linked to U.S. strength. It is seen as a proxy for the United States economy. For MicroStrategy, inclusion would solidify its position as a cornerstone of both technology and Bitcoin-driven innovation in the United States. As for their chances of inclusion, MicroStrategy's chances of joining the S&P 500 depend on its market cap growth and sustained profitability. While there's no confirmed timeline, MicroStrategy's ongoing rise in prominence makes it a strong contender. And unlike purely market cap weighted indices like the Nasdaq, the S&P 500 inclusion is not automatic. A committee evaluates a company's eligibility based on several factors, including financial performance and market impact. There was a huge inclusion controversy with Tesla stock. Tesla's delayed inclusion in the S&P 500, it was very, very controversial and interesting. They could have gotten included earlier in, I believe it was 2020, or it might have been 2021. I think it was 2020. But the committee didn't include them. Instead, they waited until the next inclusion date, I think in the following quarter, later in the year. And despite Tesla's immense market cap highlighted how committee decisions can be unpredictable, after all, MicroStrategy, I think, might face similar scrutiny given its unique Bitcoin-focused strategy. But we shall see. After all, the S&P 500 needs MSTR. MSTR does not need the S&P 500. While inclusion would boost MicroStrategy's liquidity and exposure, MSTR's long-term strategy is self-sufficient. It thrives on Bitcoin success rather than relying on index inclusion. And as we see here in the following slide, there is a profitability requirement. And if we look at it right here, we can see here that a company must have a positive sum of the previous 4 quarters of earnings as well as the most recent quarter in its own. I do anticipate MicroStrategy to get here. It's probably going to be later in 2025. They first have to adopt FASB fair value accounting in Q1 of this year, but this is all inevitable. But MicroStrategy doesn't need the S&P 500. This is all just cherries on top of the huge cake. As of when I'm creating this very slide, the prices of Bitcoin is $94,000 and MicroStrategy is $293. And I expect us to be kind of near a local bottom, but we'll see. If it goes lower, it's just a better sale to get some more MicroStrategy in Bitcoin. And that is it. Hope you guys enjoyed this deep dive into MicroStrategy and their Bitcoin accumulation playbook. It is the biggest story in corporate finance, and it's really going to be the most hated rally in financial history, aside from Bitcoin, of course. But there's a huge swath of Bitcoiners that don't understand MicroStrategy because of its financial strategy of issuing shares, diluting shareholders to accumulate more Bitcoin. And the TradFi world doesn't understand MicroStrategy because of its involvement in Bitcoin. They don't think Bitcoin is a legit asset. They might think it's a straight up Ponzi. But the TradFi world does understand financial leverage and what MicroStrategy is doing. They just don't vibe with Bitcoin, basically. These two are going to be the fastest horses in the entire financial world. It's going to be a sight to behold, and I can't wait to experience it with you guys. Take care.